Hello traders, and welcome back to Parallax Trading's YouTube channel. I hope everyone is doing well. So in today's video, I'm going to be discussing a multi-year triangle which was unfolding in USD against Swiss franc since 2015, and it's officially been triggered off yesterday. Now in front of us we have this monthly chart of USD Swiss franc, and I've got this labeled out as a double correction. I'm going to break this down actually before I get onto the triangle and then what we are projecting in the near term to a long term future. So from the lows of 2011 to the highs of 2015, USD Swiss franc actually unfolded a zigzag, and thereafter that, after a zigzag, especially like a bearish zigzag, for example here, we can expect further price action to the downside, where in fact since the highs of 2015 until yesterday, we've been unfolding a large multi-year triangle. So my conclusion in terms of labeling this is that that zigzag that unfolded from the lows of 2011 to 2015 is wave W, and then the triangle is in fact the X connector. So the next projected move would be another push high into wave Y. So I believe we're still playing within this bullish sequence since the low of 2011. So this is like decade old sequence that it's unfolding, although majority of that sequence was a lot of sideways action. But nevertheless, we can see how this unfolds in the near term future. And I'm very interested to know how wave Y is going to play out. So I'm going to zoom this in onto the daily time frame. As you can see, today's the 14th of October. Yesterday this triangle officially triggered, and the way we know it's triggered is because it breached through the extreme wave D of the triangle, right? So since Q2 this year, I've been following this wave E, which unfolded as a complex correction as well. So we had a W, X and Y, and then since then this bullish price action there's a lot of overlapping price action here. So I was in doubt whether this is going to get triggered off and whether wave E is complete yet. So I was thinking, okay, maybe we've got another push down left, or wave E is gonna unfold as a triangle, which is an exception in triangles within the wave principle. So looking at the labeling today, I have come to the conclusion we're actually unfolding a leading diagonal into wave 1 here, and the next price action would be a three-wave sequence to the downside as long as price is held above 0.937. So that's our invalidation level here at the moment at 0.937. So we are still favoring a bullish sequence to the upside, and the next projected move, I would say the near-term future, would be a three-wave sequence into wave 2, and then after that we can see a continuation to the upside. So right now the next price action is very, very important, very, very vital, because that's going to give us a good clue what the intentions of this pair is going to be. And ideally, like I mentioned, I want to look, I want this to unfold as a corrective pattern, so zigzag, flat, double zigzag, or a complex, any other complex correction would be accepted. Now, the only thing I wouldn't want to be looking out for, and obviously I've established this by placing my invalidation level, is a five-way sequence to the downside, or even a three-way sequence and is broken to the downside through our invalidation level. That would give us a good indication that either the labeling is incorrect at the moment and we need to adjust that count, or we're still in wave D of this triangle, meaning that when this wave D of this whole triangle, this is going to be either wave A or W, X, and then Y to the upside. That's wave D, and then we can see another three-way sequence into wave E, right? So I'll just show you like a idealized. So there is still a chance that we're still in wave D at the moment, but like I said, then that's our very, very least alternative count. Is just me making sure that I have a backup count should price action unfold to the upside in a very corrective way. and then I know why it is unfolding in a corrective way. So right now, I would say that, the last few weeks we can see that the dollar has been appreciating a lot. If you look at this in a fundamental sort of aspect, high inflation, a lot of uncertainties. So the market is really risk off and has been using the dollar as an emergency risk off currency. So I don't think the dollar is done as of yet. I think due to the uncertainty and high inflation, the Fed's increasing the interest rates pretty aggressively as well. We can see that this is going to be favoring the dollar to appreciate more longer, I would say at least medium term. So, until Q2 next year, I would still expect dollar to keep climbing. So, that would favor my analysis here at the moment, whether it's wave D or if it is wave Y on a higher degree. I would still say that in terms of this sequence, I will be expecting this to remain bullish. So just go and zoom out here again. So that's my analysis for dollar Swiss. If you guys have any question regarding this analysis, just give us a shout, drop us a comment, or join our Discord. If you have a different analysis, a different labeling, share that with us. I'm very open-minded in hearing other people's wave counts as well, and see if I can improve my wave counts based on that. So yeah, guys, hope you all have a fantastic weekend, and yeah, looking forward to see how this unfolds. Take care.